Vouching cash transactions. Audit of cash is one of the most important aspects of examination of financial statements because it is the most liquid and most easily manipulated asset. In many different kinds of transactions, such as sales, wages, and purchases, it is the means of settlement. Its accuracy should remain unquestioned because most other transactions depends upon cash transactions. Hence, it is the most important type of examination in the examination of financial statements. Next, we'll take a look at what is control system for cash receipts and cash payments. Control system for cash receipts and cash payments. Cash transactions in general may be divided into two types, namely cash receipts and cash payments. Separate control systems exist for each type of cash transactions. In regard to cash receipts, the auditor should check with the organization in terms of the internal check system introduced in that organization. It is recommended to follow the internal check system explained here, which is issue of receipts. When cash is received, it should be acknowledged by the issue of cash receipts. It should have a counterfoil or a carbon copy and should be in printed form. It should be signed by cashier and all receipts should be consecutively numbered. Unused receipt book should be kept under the protection of responsible officers. Spoiled receipts should be attached to counterfoil and should be cancelled. Next is listing of receipts. All receipts of cash should be entered in a rough cash book or a separate list which goes to an officer who may compare it with the cash book. Deposit of all receipts. All receipts of cash book should be deposited in the bank on the same day or on the following day of receipt of cash. This produces a bank entry which may be later used to check entries which a business may take. Also, it is advisable to keep a small amount of petty cash for making immediate payments. Opening of remittances. All remittances should be opened by the cashier in the presence of a responsible officer who should have no connection to the cashier's office. Crossing of checks. All checks received should be crossed to the effect non-negotiable and account payee. Separation of cash receipts and cash payments. The work of cash receipts should be separated from the work of cash payments and is a fact to be recognized that internal fraud may increase if the same person is made responsible for both cash receipts and cash payments. Bank reconciliation. A bank reconciliation should be done by a cashier or someone who is responsible or who keeps cash. An honest reconciliation statement may reveal shortage of cash in a bank due to embezzlement. An embezzler who may reconcile cash may also falsify it. So generally, honest persons should be sitting at the cash counter. Inventory control. A regular system of perpetual inventory control shows the amount of inventory that should be at hand on any given day. This generally discourages fraudulent activity and discourages such people to sell goods and pocket the earnings out of it. Collection of cash. Anyone who is made responsible to collect cash should be given cash receipts in triplicate, where one copy should be retained by him and one copy to be sent to the head office. In the control system for cash payments, the auditor checks the control systems and makes sure all payments are made by checks, drawing of checks in the name of a particular person, the fact that checks should bear two signatures, all unused checks should be kept under a locker and key mechanism. When checks are given out, vouchers need to be present along with the checks where signature should be taken in the vouchers. So this completes control system for cash receipts and cash payments. Next, we'll take a look at vouching of cash receipts. Cash receipts, when getting vouched, the auditor should check rough cash book and all available evidence such as receipts of cash, carbon copy of receipt of cash or counterfoils, and should vouch for the amount which is actually against or what actually exists in the primary and collateral evidences. The following steps should be taken by the auditor when vouching the receipt side of the cash book, namely, total all receipt side column of the cash book in the period taken, check the totals that are crossed, make comparisons of entries in the receipt side of cash with duplicates of receipts issued, go through each underlying document supporting receipts for periods such as copies of purchase orders, contracts, customer correspondence, files, etc. Test the cash discount for arithmetic accuracy and proprietary purposes. Next is vouching of cash sales. In cash sales, there are greater chances of fraud since it is a major source of revenue. Most of the theft is by failure to record cash receipts, and many methods are used to be effective at this, including the ones that are discussed below. The first one is recording only part of sales proceeds immediately after a sale is made effective. Second, omitting cash sales in this cash book. For both of these, the auditor relies on internal check system in the business. Needless to add, both of these methods are very treacherous and difficult to track. Third one is cash sales may be entered in the cash book, but the receipt side of the cash book is undercasted. This can be detected by taking totals of the receipt book. Overcasting of sales account, casting the amounts high. So these are the methods which are treacherous, which is normally used by fraud, and hence it is very important that vouching of cash sales must be done by the auditor. Next, we'll take a look at what is receipts from debtors. Debtors are customers from whom money is outstanding or due on account of sale of goods on credit or in credit sales. The only evidence in such a circumstance is counterfoil of receipts or its carbon copy and is issued to the debtors at the time of receipt, a feeble evidence indeed. Committed fraud. Some of the following types of fraud may be committed in such a case. 1. Not recording the receipt of cash and writing of good accounts as bad. And the next one is charging to account sales of a legitimate customer and setting up fictitious customer accounts in records. There are again techniques which the fraud uses, which are teaming, lading, and lapping. So teaming, lading, and lapping is a technique in which current cash receipts are withheld without making an entry in the accounting records. Later, upon receipt of another amount, the entry of the first receipt is made and the later receipts remain unrecorded. Lapping is also explained by experts as the concealment of shortage by delaying recording of cash receipts. Kitting. This is a method of misappropriating cash and checks. This method provides a fraud technique whereby a check is drawn and encashed but not recorded in the book of accounting records. As a cover against previous withdrawal, another check is drawn against another bank and deposited in the first bank. And from then on, this process continues. Vouching methods. With counterfoil of receipts issued, the auditor should check the debtor against price of goods. Simultaneously, the auditor should verify whether a system of internal check is instituted and in operation as a safeguard against misappropriation of funds. If lapping is found to occur, the auditor should scrutinize the debtor's account, showing part payments from time to time, especially in cases where the debtor is punctual in his or her payments of monthly debts. Next, we'll take a look at what is vouching income from investments. The client will be maintaining an investment register if he has made investments. In the investment register, he'll be entering such details as relating to shares or other securities. This is because he has invested in shares and may be receiving interest out of securities. From shares, dividend is received, and from securities, he might be receiving an interest. Hence, dividend income is vouched against dividend warrants, And interest income may be vouched against tax deduction certificates, which may be first is issued by the Reserve Bank of India. Next, we'll take a look at vouching rent received. Rent received is vouched against rent receipts made, number of accommodations that is let out, and making sure rent for all accommodations have been received and accounted for. Next is vouching loans. With the lender, there exists a loan agreement. Vouching loans is hence done with the lender on the basis of loan agreement. Additional details that are vouched remain the client's authority to raise loan, rate of interest payable, terms of repayment, and security offered as protection for the loan to the lender. Next one is vouching bills receivable. Always check cash receipts from bills discounted upon maturity of the bill. Upon maturity, check bills receivables book and see if all bills that have fallen due are being fully accounted. In some cases, the bills might have matured, but amount might not have come through. Such cases, bills might have been retired or dishonored. Sometimes the amount might have been received but misappropriated. Hence, auditor should check the original bill, and if the bill is present, he can be sure that the bill is not yet paid, and this can reveal the fraud that is happening, a direct result of misappropriation. Next, we'll take a look at vouching of cash payments. Some of the fraud committed here includes preparing false vouchers for fictitious expenses or omitting purchase returns and allowances. For cash payments, auditor, while vouching on the payment side of cash book, should total all columns of the payment side. Always cross-check the total amounts. Compare entries with cancelled checks, noting dates, signatures, endorsements, and amounts. Payment of wages. Wages is the single largest payment in most concerns, and there is a chance that misappropriations happen while payment of wages are instituted. The following types of misappropriations happen in preparing wage sheets, namely, padding or false filling the earnings of employees, overcasting or increasing the payroll, including fictitious name of dummy workers. Vouching payment of wages is by the system of internal control of wages. Here, personal records are consulted by the author in a firm. Wage records are checked in terms of wages paid to the details of the employee. Time records are tracked, which means paying wages according to time spent, as well as piece work records are consulted, which is used for piece rate system on the basis of which a worker is paid. Next, we'll take a look at vouching of capital expenditure. So here we have to see what is capital expenditure. Capital expenditure is all expenditure incurred in the process of acquiring, improving assets, and extending assets of a permanent nature, by virtue of which business may be carried on for the purpose of business's earning capacity. Vouching of payment on account of capital should be clearly done by the auditor. In relation to purchase of capital assets, the documents pertaining to it should be carefully scrutinized. Capital expenditure may relate to acquisition of freehold and leasehold property, land and building, and plant and machinery. The following documents should be verified in connection to the items, which is explained now. For example, for land and buildings, the documents that should be vouched includes purchase agreements, title deeds, broker statement on account, sanction of board of directors, including approvals and minute book details, auctioneer's note on account, certification of verification from solicitor, architect certificate, building contract, and receipts, etc. The internal checks for fixed assets should include sanctioning of proper authority for purchase of fixed asset, internal check for register of assets, proper system for physical verification of assets, internal check for expenses incurred, competent authority certificate on sale of assets, provisioning of depreciation, etc. For plant and machinery, the documents that should be verified includes invoices, receipts, expenses incurred for erecting and fixtures, vouching of purchases made, as well as examination of bank and passbook details. Lastly, we explain petty cash vouching. The treatment of petty cash vouching is generally considered as an unimportant activity. In many business concerns, it is not also a subject of audit. But there exist numerous opportunities for misappropriations. Hence, auditors should take particular care in vouching cash transactions and cash accounts. In many cases, vouchers are not obtained for petty cash payments, but auditors should make sure the payments are in order and the number of petty cash payments should tally with a petty cash voucher kept in particular for this purpose. So this completes vouching cash transactions. Thank you.